Hello and welcome to Blocks Live TV. Today is Thursday, April the 4th. We're now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, to 11:30 p.m. in Tokyo and 3:30 p.m. here in Malta. The total market capitalization hit a fresh high for the year at slightly more than $185 billion over the past 24 hours. So let's take a closer look on today's Crypto Now live show. Bulls might have taken a slight pause today, but the cryptocurrency index CCI 30 remains at an elevated level of just under 3,200 points. The index of the top 30 cryptocurrencies is more than 21% in the green so far in April and up by a massive 45% year to date. The recent market turbulence has finally manifested into the 30-day Bitcoin Volatility Index, which has jumped by nearly 2% to rise above the 3% mark. This is the highest level since January of this year. According to the CoinMarketCap website data, the 24-hour traded volume indicator has remained at an elevated level of more than $80 billion during most of the past day. While experts question the reliability of this indicator, it still shows the pace of trading has picked up significantly. The Bitcoin dominance indicator briefly rose above the 51% mark, but it has once again moved south on this level as Bitcoin slipped from the intraday highs. The top 5 digital assets show a mixed performance, and there has been a change to the top 5 rankings, which has been joined by Bitcoin Cash. Bitcoin is holding ground above the $5,000 level, and the top crypto ventured into the $5,300 territory briefly. Ether has retreated by slightly more than $10 after surging towards the $178 level. XRP has slipped just below the 35-cent line, which could now act as a resistance. Bitcoin Cash is the new addition to the top 5 chart, as it surged by more than 100% this week before retreating from the high at just over $340. Litecoin is now the top 5th asset by market cap and has retreated slightly following yesterday's rally when the altcoin appeared to be on its way to the $100 level. The Coin 360 heat map shows a mostly green picture, with both Ether and Ripple's XRP posting declines of approximately 1%. According to the Token Spread website, the biggest intermarket buy and sell side difference is just over 1%, and it's between Coinbase and CEX exchanges. The XMO exchange has the biggest spread for Bitcoin dollar, and it's 0.22%. We'll now look at some of the characteristics of Ardor. This blockchain as a service multi-chain platform looks to solve scalability issues. Ardor is the parent chain that provides security for the blockchain network, and the action happens on the child chains. Transactions, smart contracts, and token trading are all available within and between these child chains. The platform's native ADR coin spiked above the $2 price level in January of last year. As of today, the altcoin trades at close to 9 cents. We'll now review the performance of the various cryptocurrency asset classes. We use data from the Messari website, which groups cryptocurrencies into 5 major categories. The infrastructure group is virtually unchanged, as it stands a fraction in the red. Ethereum and Ethereum Classic are both trading south, but Ontology has gained close to 10%. The media and entertainment category has declined by close to 2%, as a majority of the top assets are trading in the red. The financial sector is the worst performer, with a decline of 2.5%. Algor's REP token is one of the top bearish drivers, with a drop of 16%. The currency category is the only group that's in the green, and Bitcoin Cash is a major bullish driver with a double-digit surge. And lastly, the services section is just slightly lower, as assets show mixed performance in this group. Well, that's where the 5 major cryptocurrency categories stand so far on this Thursday. We'll now focus on the most significant moves among the top 100 cryptocurrencies to identify the top gainers and the biggest decliners. There are plenty of significant increases as 8 assets post double-digit gains. The IOST token broke through the 1 cent level earlier this week and has continued rising sharply up. The token is up by a massive 25% over the past 24 hours. The project announced that IUSD stablecoin will be released on the IOST blockchain this month. The stablecoin market is dominated by ERC20 standard assets, and this solution would help bring liquidity into the IOST ecosystem. The recent rally continues for Dogecoin, which has now nearly doubled in value since Monday. As our experts concluded yesterday, the Twitter exposure from Elon Musk could be the main driver for the surge of this coin. Bitcoin Cash jumped by more than 100% this week. The altcoin has retreated from the intraday high, but is still up by 21% as it holds the ground above the 300 price level. The Insight Chain token spiked above 30-cent level and is currently close to 19% in the green, but nearly all of the traded volume is concentrated on a single exchange. The Ravain token posts a daily gain of 17%, and the asset has been facing some resistance around the 16-cent price range. There are some significant declines among the top 100 digital assets today. The Maximine coin has seen a major correction today, and the coin dropped towards the 5-cent price level on a decline of nearly 60%. Traders should be cautious as almost all of the volume is generated on a single cryptocurrency exchange. The coin has skyrocketed by approximately 900% over the past 30 days, and the price of this digital asset has surged towards the 15-cent mark. The Qcoin shares token gained nearly 400% over the past month, but a major correction has wiped out 22% of the price during the past 24 hours. The Algor's RIP token peaked at more than $25 yesterday and is currently trading near the $20 mark following a decline of 13%. The Metaverse ETP coin has given up some of the recent gains in a daily correction of close to 9%. This came after the altcoin failed to break through the $1 resistance level. The Digitex Futures token wraps up this list with a decline of 5%. Well, these were the top 24-hour moves during the European morning trading session on this Thursday. We'll now join our crypto experts, Jason Fernandez, COO and co-founder of A Token, and Kevin Murcko, CEO of Coin Metro Exchange. Great to have you both on the line with us today.
Hi, Jessica.
Great to have you back. Now we've got to jump straight in because Bitcoin has found support above the $500 level after peaking at around $5,300 US. What's your thoughts on the Crypto Kings move that we have seen over the past 24 hours? Kevin, we'll start with you.
Sure. Just a correction. You actually said $500 level, so I had to check CoinMarketCap real quick. It's still 5,000, everybody.
Still 5,000.
Yeah. So as I look at CoinMarketCap right now, we're sitting at 5,008.73 US dollars. I would say that normally when you break through psychological levels, and we saw that happen around 4,000 as well, where we played with 4,000 for a few weeks. And as we were playing around 4,000, we would see frequent buys to push the value up close to 4,000 and then sell pressure to push it back down. Frequently above psychological levels, you'll see a gap of maybe 3 to maximum maybe 10%, where there are lots of pending orders to sell because traders believe that as psychological levels are broken, basically what happens is retail guys or let's say fresh faces in the market will put on fresh buy orders right above that psychological level, so right above 5,000 in this case. And more experienced traders are there to eat up those orders and then push the price back down to basically rinse and repeat and make money intraday. So what I see now is that, yeah, we have broke 5,000, which is good news, but we haven't really seen a real powerful break of 5,000. We got up towards 5,300, as mentioned, and we fell right back down below 5,000, and now we're hovering just above and just below that figure. So I think that the market's kind of looking for direction, and probably, at least to mitigate risk, a lot more, I would say, thoughtful traders have probably pulled some of their pending orders off the market to try to get a glimpse of where the asset's going to be headed next. So I do think that it's a positive sign that it's over 5,000, that's for sure. I don't think we're done playing with this level, though, and I think we're going to see some ebb and flow back and forth, and whether outflows to the altcoin market or inflows back in from altcoins into Bitcoin once they can take some profits. And until we see a clean break above probably that 53 to 5,500 level, I wouldn't even start talking about 6,000 or any other psychological level past that.
So, Kevin, you're expecting a back and forth around 5,000. Jason, what's your take on the past 24 hours and what we've seen?
Yeah, so I fully agree. I mean, we've just crossed 5,000. About an hour ago, we were under 5,000. So it's looking like right now, even if we pass 5,000 significantly, we're going to see a struggle back at the 5,300 point because traders would be like taking profits off the table, and which is what we just saw yesterday. So, but trading volume has gone up. It's at 82 billion today, which is obviously indicative of extreme interest. I still think that Bitcoin is undervalued overall, because if you were to evaluate Bitcoin on the basis of the amount of assets it could conceivably replace. So gold has a market cap of 7.5 trillion, and let's say 5% or 10% of the people currently of people that are currently holding their holdings in gold, let's say, should decide to move to Bitcoin. That would basically help give us a better idea. That could obviously skyrocket Bitcoin's valuation, but that can help give you an idea of how much Bitcoin is worth. But if you also look at like the remittances business, for example, that's a $600 billion overseas market. And Lightning Network has meant that Bitcoin can actually play in the remittances market as well. And as adoption is steadily increasing for Bitcoins, you see Bitcoin ATMs, etc. When you add all these things together and the amount of impact Bitcoin can have and use cases it can have in various different markets, you start realizing that it's actually kind of undervalued. So I think that it's going to start inching up, hopefully sooner rather than later.
And that's interesting. And now let's look at events surrounding the past few days. So, Jason, I want to stick with you and get your insights on this first of all. So we have seen the US Securities and Exchange Commission. They released a framework for investment contracts analysis of digital assets yesterday. Does this bring the clarity that's needed for the industry to mature?
So I'm not really impressed with this document. I think it would be much better for them to release something more exhaustive. It says right there in the document that the guidelines are by no means complete. They should serve as legal advice. Well, we get should serve as legal advice, but we could probably do with some better guidelines. I mean, it's positive in that it means that the SEC is finally starting to think about the crypto market and release, some sort of clarity for people in the crypto market. But thus far, we've had the Howey test, and so essentially, this document is supposed to clarify how do we apply the Howey test on cryptocurrencies and try to figure out whether it's a utility or a security. But the problem is what they've done is essentially they've included a bunch of possible examples. So, for example, they said, if there's a combination of that, of those factors, that could indicate it's a security. So one of them is that the digital asset is still in development at the time of the sale. So if as in the case of a lot of these ICOs, if you're still developing your product while selling your tokens, that would sort of lean to indicate that it could be a security. Then they have other examples. So they say when the active participant controls the total supply of an asset through creation or burnings of tokens. And obviously an opportunity to profit from an appreciation in value happens a lot, but obviously in this case, if that's your main goal, then you're a security. But if you actually start looking at all the examples that they've given, it seems to indicate that practically, or at least huge numbers of crypto projects may be in violation of U.S. securities laws, and so that's really, really troubling, and starts to make you wonder how exactly this is all going to play out, because their examples are extensive, and a lot of companies fall under those examples.
And Kevin, what's your take here? Do you think these contracts are set to bring some more clarity into the space?
No, it does nothing to bring more clarity. Basically, it's what any lawyer that charges you, let's say over $200 an hour would have told you had you brought your case to them. So it's kind of like like Jason mentioned, which is kind of funny. It clearly says it's not legal advice, but that's exactly what it is. It's basically basic legal advice that any lawyer would have given any of these projects had they gone to them. It gives no clarity on even what they consider the definition of a utility token to be. Like Jason said, it gives some examples on what a security is. Unfortunately, it doesn't really clear the air on any of major questions that I think issuers would have. And at the end of the day, the Howey test, obviously is a very, the Howey test, the main one, which Jason mentioned as well, is speculation. If you can speculate that something may increase in value. To be honest, though, you can apply that to almost anything. I mean, if you buy an apple at the supermarket and then assume that you may be able to sell that apple outside of your house 2 days later for slightly more money, under the Howey test, that Apple may be a security. So I think, to be honest, they probably are tired of getting calls at the SEC from issuers or potential issuers and asking them, hey, is my ICO a security? Or is my token a security? And so they just release these guidelines, like I said, that are basic things that any lawyer would have told you. At the end of the day, though, as Jason mentioned as well, you're talking about 99% of all ICOs that were run that had any U.S. exposure under these guidelines and under the Howey test are probably going to be considered securities. The question in my mind is, if you take the Howey test at face value, Ethereum is a security, because it ran an ICO, and people definitely bought Ethereum with speculation that it was going to be priced higher. Even in forum posts I've seen around the time that Ethereum was launched at around 30, 40 cents, people were already speculating about the fact that it was going to be worth more money. So, and their complete, let's say, product as far as ready to roll on smart contracts was not 100% developed before they started accepting money. So that makes them a security. However, the SEC has come out and say they're not looking at them as a security. So the question is, can you be a security today and 6 months, a year later, not be a security? And how are they treated on both sides? And the one thing that I would say they shed a little bit of light on was that question, because they did talk about that a bit, saying that there needed to be some type of, I guess you want to call it maybe a hybrid solution where there can be, and maybe it wasn't in this document actually, but I read something maybe from the SEC chairman that had spoke about this. But that is a major question, because under this guideline, Ethereum is a security. So how is it that it's not? That's again. So it makes more questions than it answers, to be honest. But clarity it does not give. That's for sure.
And another thing that we have seen from the Commission, it also issued a no action letter to Turnkey Jet Company, which provides clarification they don't view Turnkey token as a security. Is this an obvious statement, or is this an important precedent for the crypto space? You've mentioned there that time frame is very important in this. How did you view this, Kevin?
Well, no, actually, if you kind of compare this particular token to the guideline, it almost could have been one of the examples, but on the other side of the fence, because they basically said it's not a security, but they also stated in this letter that they could sell their token under very specific conditions. And those conditions include that they cannot use the money to develop a platform or an app or anything else, that it has to be for access to the product, to the actual utility of the token. That they must restrict transfers between token wallets and token wallets. They can't have external transfers. There's a ton of different, let's say, specific rules that they set in place that would make this specific token under their eyes or under their guidance not a security. What I would say is that the restrictions that were placed on this token so that it would pass the SEC muster probably would have just decimated almost 80 to 90% of all utility tokens, because at the end of the day, if the company can only restrict transfers between, let's say, their own token wallets and their own token wallets, and they can't actually move those tokens out to external wallets, well, that probably would have killed any sale possibility, or at least a great amount of sale possibility. Not to mention that, as we already talked about, in development, most ICOs were raising money for just that, for development of a future platform. And to be honest, that's also where most of the speculation lies, because if a client buying this token was speculating on the fact that they were going to create this platform, then they're speculating on the fact that the token would actually increase in value, which gave them a reason to buy it. Without that speculation, because the platform's already in use, again, I think, while, to be honest, it's not bad news, because it does give, I guess, a little glimpse into what the SEC wants to see to fully clear a token. It's not good news either, because it's basically pulling the wings off of, let's say the ICO itself, or most ICOs, when you talk about when, why, and how they sold or raised as much capital as they did.
Okay, so you think they're kind of almost missing the mark a little bit?
Well, I think they're par for the course when it comes to the SEC. I think a lot of people were expecting maybe some greener pastures or a rainbow to come out of the SEC, and they didn't get a rainbow. I think they got some thunderclouds.
And now, Jason, we're going to go over to you now because we're going to talk back about Bitcoin. So Bitcoin Miner Award halving is set to take place in 2020 May. Now, this is often cited as one of the catalysts for the recent bullish move that we did see. I want to ask if you agree with this, and could this remain as a major bullish driver for Bitcoin in the coming year?
Yeah, I think so. I think it starts pumping actually about 18 months prior to halving. And I think Bitcoin started turning around sometime around February 28th, something like that. So I think it's right on time. One of the important things is when the rewards are halved, Bitcoin miners will basically have to work much harder to get the same reward. That means that the rate at which new Bitcoins are made is going to be slowed basically considerably. And one of Bitcoin's main drivers is scarcity. So Bitcoin is, like I mentioned before, one of the first scarce digital object that the world has ever really encountered. And unlike silver and gold, you can actually send it via, internet, radio, and satellite. So that makes it significantly better than, just from a technological perspective, than even silver and gold, or as many other, assets that are perhaps not digital. And one of the interesting things is, like I mentioned, scarcity and the amount of Bitcoin is going to be maxed out at 21 million. I've actually seen reports recently that something like 36% of Bitcoin's entire circulating supply has already been lost forever. And so because of its finite nature and its digital scarcity, I think this sort of thing is the halving is going to make a huge difference and be a catalyst for the value of Bitcoin.
And Kevin, what's your thoughts on this? What's your thoughts on the fact that we are seeing this is a potential bullish driver in the coming year for Bitcoin?
I think it definitely is a bullish driver, though I think with every halving, that bullish drive is diminished slightly, mainly because if you look at the amount of Bitcoin, and there definitely is a scarcity element, as Jason mentioned, but I think we currently have somewhere in the realm of 17 million Bitcoin that are currently in circulation out of the possible 21 million. So obviously when this happened, when halving happened initially, and you're talking about you only had 10, 15, 20% of the overall possible circulation in circulation, and that halving really did cause a dramatic slowdown to the amount of Bitcoin that was being produced. As we have each time, though, while there is a slowdown, it does cut it by half. It is still not close to the effect that it had initially as we move through these halving processes every time. So I do think scarcity is definitely something that will always drive a market higher, but the effect of scarcity over time is diminishing when it comes to these halving let's say situations that happen. Having said that, I think it all depends. It depends a lot. Like we've talked about many times, Jason and I have talked about on the show. This is a hype-driven market, and with Bitcoin, you don't have really normal PR hype. I mean, you may get hype from the Lightning Network, and you may get hype from other companies that are doing business with the Bitcoin blockchain, but you don't really get hype from Bitcoin directly. But halving is kind of like the Bitcoin hype. So depending on what the hype cycle looks like, depending on what the price point is, getting up towards when the halving is going to occur, it can have a much greater effect than it would at a lower price point, I believe.
And now, Kevin, I do want to end with you and ask you about Bitcoin Cash, because it has doubled in value since the week to become the fourth cryptocurrency by market cap. I'd like for you to identify some of the reasons that you believe we've seen this sharp increase in Bitcoin Cash.
Sure. So to be honest, I had a look myself just to see if there was any news I might have missed that had some type of fundamental. And while there are a few things floating around, I didn't really see anything that gave a lot of credence. What I would say is that historically, I think, especially since the fork happened and Bitcoin Cash was initially created, we've seen a very direct correlation, almost like let's say a gold to silver correlation kind of thing, where when markets move in one direction, they kind of moved in unison. Especially during the 2017 run-up, we saw Bitcoin Cash reach over $3,000. Where obviously now it's significantly lower, just like the rest of the market, unfortunately. But I think, to be honest, when the Bitcoin surge in and of itself could be a major catalyst for the move on Bitcoin Cash, mainly because players basically see the move happening on Bitcoin and they immediately start to diversify because they're used to the correlating effect. So that correlating effect, while it is started to diminish, it definitely still exists. And I think that when you see major market moves, either to the upside or the downside, it kind of just verifies that fact, that correlation definitely still exists. Because as we've seen in this altcoin season over the past maybe 2, 3, 4 weeks, we've seen that correlation kind of started to diminish. But as soon as we saw a big move on Bitcoin, everything went green. So I do think that the Bitcoin rise was probably a major catalyst for Bitcoin Cash.
The correlation still there. Well, thank you both, Jason and Kevin, for joining us on the line today. It's always a pleasure to have you during the live show. Thank you so much for your time today.
Thanks, Jessica.
Thank you, Jessica.
Thank you. Well, before we sign off, I do have a last-minute update from our editorial staff regarding the crypto market. The total market capitalization calmed down as the North American trading session kicked off. While the overall market was mostly moving sideways, trading activity remained at an elevated level as the 24-hour volume stood at more than $80 billion. Bitcoin Cash has given up some of the earlier gains, but it has held on to the 4th ranking position with a total valuation of more than $5.3 billion. Well, that's all for this Thursday's Crypto Now live show. We thank Kevin Murcko and Jason Fernandez for their expert analysis, and we thank you, the audience, for joining us, and invite you all to accompany us every weekday at this same time.